I'm still very, very bullish on multifamily, and and I believe there's going to be some incredible opportunities. We're already seeing them, like this one
Yeah.
that I've got under contract, as of today.
Well, Rod, thank you for coming back on. When I was looking for somebody to do a multifamily 2024 outlook, I didn't look any further. I knew where to go. So you always
Well,
have
I
your finger on the
appreciate that.
pulse.
I
Yeah.
appreciate that. I try, but there's so much conjecture and hypothesis and
Yeah.
guessing and so on. All you can do is kind of accumulate as much of the knowledge as you can, and then just, make your investing decisions based on what you see. I'm still pretty bearish. I'm going to tell you.
Right.
I really believe the proverbial, what, I think is going to hit the fan. Just in commercial real estate,
Right.
I'm not sure if it's going to handle what's going to happen in single family. They're talking about two, three rate decreases, but they'll be small. There'll be 25, 50 basis points. They're not going to be significant. Um, and so I've heard a lot of scuttlebutt about the fact, and really it makes sense. I mean, that if they only do like 350 basis point rate reductions, it's not that big a deal. It's not going to change that much. I
Right.
don't
Yeah.
think it's like be a massive stimulus to the economy. It's just, it's not going to be that big a deal. So what's going to happen? Now, what we do know for sure is there's like 1.6 trillion in debt coming due by the end of next year, total between all asset classes. A half a trillion of that's multifamily. So, I mean that number varies depending on where you read or whatever, but that's something I pulled out of an article. And I mean, even if it's a little less than that, it's still hugely significant. And so, those people have two options. Those operators, and I was literally just on a call with partners, literally right before I came on this,
Mhm.
because we're talking about debt that's coming due next year. And
Sure.
do we go ahead and lock it in right now because the things have dropped, the rate caps have dropped, and so on, or do we wait to see if it gets any better? And one guy's vote was do it right now, and the rest of us are thinking maybe we're going to wait. So,
Mhm.
literally having that conversation myself with on a couple assets that we have debt coming due on. So, but here's the thing: you either have to refinance that debt or you have to sell. Sales are
Right.
down 80, 90% right now. Okay. And we're starting to see distressed assets come down the pike, Joe. I mean, we've got a fantastic deal going under contract today in San Antonio. Literally, it's going under contract today. We're in the last part of the negotiation, and it's a mile away from one of our other assets. And I haven't bought a property in over a year. I mean, if you know my story, if you listen to a previous episode with Joe here, I got my butt handed to me in 2008-9. I lost $50 million. And so I'm super conservative. Hit me once, shame on you. Hit me twice, it's Rod's fault. And so, I'm super conservative. But even with that, we found this deal, and I'll just describe it real fast to give you an idea what's coming down. So this property was listed for 28 million. It was under contract twice for 26 million. The first guy had SEC issues, second guy couldn't raise the money. We're under contract, so 28 to 26. We're under contract for 20. Okay,
Ooh.
200 units. Yeah, 200 units. And what's awesome about that is, it's well, first of all, it's a beautiful asset. It's on a lake, a lot of lakefront units. It's
Yeah.
on a golf course, so I mean, it's a spectacular asset. But it's a mile away from our other one, and the units are larger and everything else. But the asset right next door, the complex right next door, sold for 137,000 a door within the last 12 months. This one's we're buying for 100,000 a door, same age range. So
Right.
I mean, it's just a screaming deal. So that's what's happening. This guy ran out of money, but this is an assumption. We're able to assume 4% interest. It's got 7 years left on it, so it's a very safe loan,
Yeah.
very good debt, and conforming debt. So we're very excited about it. But those deals are starting to come around
So
from these
sellers are,
operators in
yeah,
trouble. Yeah.
sellers are starting to get a little more realistic.
A little bit. I'm not going to say a lot. Okay. We're
Right.
still kissing a lot of frogs. Like we looked at 3 deals today in our pipeline. Two of them fell out instantly. One has some merit, also in San Antonio. We're racing the clock on that one. We're starting to see that. We love that San Antonio market. It's like literally the
So,
hottest market in the country right now because it's literally almost in the Austin
mhm.
MSA, as it were, and Austin's like insane. But listen, I do believe, and I've mentioned this before we started recording, Joe. I really believe that the current administration has to use their influence to lower rates before the election.
Right.
After the election, I think all bets are off, regardless of whichever party wins. I don't think it matters. I think all bets are off, and I think the proverbial you know what is going to hit the you know what. I really do. And so, and I'm not saying that to scare people. I mean,
Sure.
the beautiful thing about multifamily real estate is very resilient if the debt is good. When I lost everything in 2008 and 9, it was my houses that pulled me down. My multifamily did just fine. Pulled back about 10 or 11%, would have easily survived if I hadn't cross collateralized my apartment complexes with packages of houses. And
Mhm.
and so, we've become a renter nation. There's a huge demand for housing. So, that's not going anywhere. When COVID hit, office didn't get help, retail didn't get help, industrial didn't get help, self-storage didn't get help. We got hundreds of thousands of dollars in rent relief money because people have to have a place to live. So, yeah, I'm still very, very bullish on multifamily, and I believe there's going to be some incredible opportunities. We're already seeing them, like this one that I've got under contract, as of today. So.
Where are we at with construction starts in multifamily? Is that up, or is that's
It
probably
dropped.
pretty
No,
low as
they've
well,
dropped,
right?
dropped, dropped way down. And I've got partners that are significantly. They have financial wherewithal, and they're struggling to get financing through on, stuff coming out of the ground. And
Right.
so, these are significantly wealthy guys that are
Mhm.
struggling with their stuff coming out of the ground. They're struggling getting the financing put together, raising the equity for it, everything else, because there's
Right.
so much conjecture with it. But I love that. I love that
Yeah.
space. I've never done it, but I think it's an incredible opportunity right now because the starts are way down. So
Mhm.
that, if you're able to get something done and get it out of the ground, you're really going to be positioned well because you're not going to have an absorption issue because, so many deals aren't happening. So,
Yep.
you know,
What's
I wish.
happened with construction costs? They've come back down considerably too, though, right?
Oh yeah, 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 way down, way down. And I know this because I'm not building anything, but we had a
Right.
fire at one of our assets in Nashville. 20 units got destroyed. Thankfully, nobody died. One woman had to jump out of the third floor balcony, but she had some knee damage, but she's okay. So we're rebuilding that right now, and we're in tune with what's happening, and the pricing is fine. I mean, it's
Okay.
normal. It's normalized in my opinion. So.
What are you seeing with concessions across the country?
Well, you mean seller concessions? Like are they dropping their price, or what are you asking me?
Renter concessions.
Oh, renter concessions. Oh no,
Yes.
the rent. We're definitely seeing some flatlining in rents on our
Okay.
pro formas. We're not projecting any rent increase the first year, and we're down to 3% the second year. Where we used to be doing 5, and so no, we're being very, very conservative in our rent pro formas, and you're seeing that. I mean, you're seeing rents flatlining and even retracting in some
Right.
markets. Some are still okay and have small bumps. I mean, Florida. You can't they need to put a gate at the door and lock the gate because you can't keep people out of here right now, but
Right.
elsewhere in the country we're seeing some flatlining. Nashville is a great example. Even
Yeah.
though it's a beautiful A- asset, we've had to drop our rents I mean, we're 98% occupied, but we had to drop our rents to get there. And so there are markets like that around. It's very geographically specific, though,
Sure.
Joe,
Yeah.
as it relates to what's happening rents, and what's happening in particular markets. Now, Nashville has a lot of new stuff that's coming online this year and next, so that has impacted that particular asset that we bought. But it's still a home run all the way down the line. But we've had to drop rents for a while, and
Yeah.
uh,
You,
you
but you're
know,
not having to give 1 or 2 months free rent to get people to move in anymore, right?
no, no,
Yeah.
no, not at all.
Where are you guys at with your amenities? Are you guys adding amenities in all your properties?
Oh yeah, sure. No, we're still doing that. Like this asset we're buying in San Antonio, 200 units on a lake. We're going to make some recreational improvements on the lakefront. We're going to put in
Yeah.
some more barbecue pits, lighting, picnic tables, things of that nature. Maybe an exercise facility there. I mean, not a facility, like an outdoor thing where you can
Mhm.
stop and do pull-ups and push-ups or whatever. And then we're converting tennis courts to pickleball. We're redoing the deck and putting in gazebo and barbecue pit in the pool.
Okay.
Putting in a package locker, which is, keeps the leasing
Yep.
office from having to deal with packages all day long or having packages stolen in front of apartments. So that's really a plus. And we're actually reintroducing a fitness center there. They'd taken the fitness center out. We're putting it back in. Fitness is important.
Mhm.
So we're putting that back in. What else are we doing there? Just, obvious fix up stuff, redoing the whole parking lot, striping it. We're numbering the parking spaces because,
Okay.
we give people the option to have their own parking spot. We did that at the asset right down the street a mile away, and we numbered the parking spaces. We allowed them to pay $25 a month to have a spot right in front of their right in front of their apartment. And we had 100 people take it.
Yep.
And at that current rate cap, that was an $800,000 increase in value for some paint
Mhm.
on the freaking parking lot. So,
I
yeah,
know.
uh,
We did that in Texas too, and we had
yeah.
a big property there, and then but we also built carports. Do you have carports on the
Mhm.
building?
Yeah, this new one has carports. My existing one doesn't. It really doesn't make sense there. We're not going to do that. But the new one has them, and so
Right.
they're not getting managed properly. They're in good shape. They're in great shape. Sometimes you see them and they've been banged up by trucks and everything else. These are in
Yeah.
really good shape, and so we're gonna corral that and juice the income out of those for sure. But by the way, if you're listening and you're accredited, to check out that San Antonio deal, text the word partner to 72345. We're going to start raising money for it. We're having our webinar actually tomorrow night. I don't know when this is airing, but it's tomorrow night. But if you text partner to 72345 and you want to check it out, the returns are very, very solid and it's super conservative with that debt on it. But
I'll put your
I haven't
contact
had
information down below.
no, I appreciate that. I haven't had to raise money in over a year because
Sure. Yeah.
I haven't bought anything. So I've got to kind of get my money raising hat back on.
I
Uh,
can
but
imagine. Yeah.
yeah, we've
What
had a lot of interest. Yeah.
of the amenities you're putting in, Rod? Which one is get you the best bang for your buck?
Boy, I'll tell you, it depends on the demographic. Like that
Sure.
Nashville asset, we put in a beautiful $80,000 playground because it's all 3-bedroom units. So there's tons of
Oh
kids
yeah.
there. So we
Yep.
focused on the kids.
Yep.
I will tell you, sometimes it's the security related amenities. There was a homeless camp across from that Nashville asset. Thank God they're removing it here in 2 weeks. But we had crime there. We had cars getting put on fire and just crazy stuff. So we had to put in gating and pedestrian gates, and of course the main gate, enhanced lighting, an enhanced camera system. So in that case, the amenity was really the security. So, in other assets, people love stuff you do to the pool, gazebos and things. And of course, when that pool is connected to the leasing office and it looks fantastic, that impacts your ability to lease units.
Sure.
In some places, that package locker, I believe it or not, is a very desirable thing. Maybe more for the employees than the residents,
True.
but
Right.
I remember we bought that Nashville asset. And my God, there was like a room full of freaking packages. Like, man, we got to do something here. So we put the locker in and eliminated that. But
Yeah.
I will tell you, upgrades to the leasing office can be very important if it's really dated, because that first impression, is super important. Any landscaping, painting, anything exterior wise that juices the place has a big impact. We like to spend money there, like right out of the gate, especially if we're going to bounce rents right out of the gate. We want them to see we're doing a lot of work, obvious exterior work. It's more important
Yeah.
than the interiors being refinished for us when we get started.
Yeah, that's key. If you're gonna bump
Yeah.
somebody's rent and you come in and bump the rent and you haven't done anything to the property,
Right.
it's a lot
Yeah.
harder to get a higher rent. If you go in, start making it look good, it's a
hmm
little higher to get that rent.
Yeah, but buttoning things up like this place,
Yeah.
I'm referring to this Nashville asset. There was crime because of that homeless camp and cars getting broken into, and we had to really secure the place, and boy, they just really appreciated that. And then the enhanced lighting is like a light bulb at night now.
Yeah.
I mean, it's really lit up well in the camera system, and that really made a huge difference.
Yeah.
Yeah.
When people are feeling like you actually care about the community and you're protecting them,
Yeah.
that makes a big difference.
Sure. And
Now,
I will tell you something else that we do and I will tell you this is super important in this economic environment we're going into. Tenant retention is everything. And so,
yes.
we place a lot of weight on events at our assets, like that San Antonio asset that we already own. We did a Christmas party, and that manager dressed up as a Grinch, and it was just hilarious. And we do pool parties. We have our vendors that sell us material provide the food, and an ice cream truck or a vending truck, and the food is gratis. And or a pizza party with a movie party at the pool. Breakfast on the go. The team is out there when the residents are leaving, handing them a bagel and cream cheese or whatever, a croissant and a cup of coffee or whatever. And that stuff goes a long way to building a community and making it so people can stomach a little bit of a rent increase because they feel like they're coming home.
They're
Super
part of
important.
the community.
Yeah, your biggest expense in multifamily is turnover. So anything you can do to avoid turnover is critical. And so we place a lot of weight on that stuff.
Do you now, when you buy these units, do you have to turn most of the units, or are they usually in pretty good condition?
Well, this new asset we're getting, we have almost a $4 million CapEx budget, which is pretty significant for 200 doors. But we're going to change the demographic there. They ran out of money, and there's a lot of vacancies there right now, about 40 empty units. And so we're going to have our hands full. But what's beautiful is we've got such a kick-ass management company that's handling the asset down the street, and they're just killing it. And so, we've got really good team in place to manage this and manage the CapEx that we're going to do, the improvements we're going to make, and just slowly turn that demographic around. Because right now I'd say it's a C+, but it has absolutely the bones of a B asset, and lakefront, golf front, big rooms. Every unit has a fireplace. Every unit has washer dryer hookups. I mean, they're really nice units, and they're large. And so we can really do something with this, and we're very excited about that. We're going to paint the exteriors and repair a lot of wood repair and so on and so forth. So it's a significant budget, but the key is to upgrade the tenant demographic there, and we'll be able to do it for sure with these units.
All right. So now you own how many communities do you own right now?
Oh gosh, I don't know, 23, 25, something like that.
Okay.
Yeah.
So managing all that,
Mhm.
the key that, a good manager, a good management company is a key to your success, right?
No question. They are partners. That's critical. And of course, you're managing them as part of this process. We have asset management calls every week. We canceled this week's because that asset in San Antonio is doing so well. But I am having the Nashville one right after this interview.
Okay.
So Tuesday's my big day for asset management calls. But yeah, so you have key metrics. We've got some incredible software that we use to manage the metrics and the KPIs for our assets that we get a report every morning on, so we can see anomalies and things like that very easily. So that's what we're doing is we're just watching that real time to take a look at how are the renewals doing, how are the collections doing, how are there any anomalies? It's called almost like an exception report, an anomaly report, to look for any issues that you're going to want to deal with immediately. And so, that's you need to have your eye on the ball right now.
Oh yeah. Now, did you build a custom platform that you're monitoring every day?
Actually bought it from a law firm that we do business with.
Okay.
And I think they're still in beta, so I'm not going to share it publicly right now, but I can share it with you privately. But they're awesome, and we've presented it to my coaching students. So I've got warriors; they're my coaching mentorship students, and so I'll brag for a minute. Something I'm super proud of. They now own upwards of 180,000 units that we know of, but probably more, somewhere between 180 and 190. And I've only been teaching for 5 years, so I'm super freaking proud of that.
Where are you? I know you got to go. So
no, I'm all right. I'm all right, buddy.
Appreciate
I'm
you
good.
taking the time. But where are you at with implementing AI? Are you guys moving forward on that right now?
Yeah. We've actually got a complete initiative for that happening right now, and we've been exploring all these different options. We haven't really used like the Chat GPT that much,
right.
But there are some really cool options. Now, I wasn't prepared to answer that question, but I know we've implemented some things already. Some things that look really cool. Like one of them is we can send videos. Now, we haven't done this yet, but we can send videos where it looks like I'm saying the talking and using the person's name.
Yeah.
So it's like, hey, Mark, thanks for checking out the Warrior program. Would love to have you in it. Kind of something like that, for my thought leadership platform. or an
Yeah.
investor, hey, Tom, really appreciate your interest in this asset in San Antonio and look forward to chatting with you about it. I mean,
Yeah.
it's real personalized, but it's actually AI, which is just cool as hell. So you're not
Oh
even going to
yeah.
know what's real. You're not going to know what's real anymore. If you're talking to somebody or if it's an AI thing. So yeah, so it'll be interesting to see how this transforms and impacts business. But this is a good question.
Yeah,
And
it
I'm
is.
excited to see. I'm excited to see. It's just astounding to me what we can do with
Yeah.
technology. I mean, just the fact you can be 36,000 feet in the air and sending texts and
Mhm.
communicating with people and everything else, and that always just shocks
Yeah.
me. And I just saw, like yesterday, they have the strongest robot out there. They were demoing this robot, and they were kicking it and pushing it, and it just was able to keep going. And it'll be
Yeah.
interesting to see how it all shakes out, Joe.
Yeah. I think it's going to really simplify the property management industry. I think it's going to make it
Yeah,
a lot more efficient.
yeah,
Um, harder
agreed,
to
agreed.
really tweak the numbers. It's going to have to be you can keep your KPIs in line and know where every penny's going.
Well,
So
certainly they're already doing it in the inbound communication
right.
from prospective tenants. Now they have great AI solutions already. They're very quick responses, and they think they're dealing with a person, and it's AI driven, and that's already our management company is already implementing all that. So, yeah,
Yeah.
we've seen some cool stuff there already.
Yeah.
Yeah,
It's just going to get faster. And but I've heard,
yeah,
I don't know if you know who Rod Santomassimo is. He
yeah,
does a lot of broker coaching, and he was doing some AI stuff. And there's an AI of him giving a speech, and it wasn't really him. It was
yeah.
I guess not a clone, but an AI of him, and
Right.
pretty amazing, pretty
Yeah,
amazing.
they
It's
did.
just like,
They did a whole interview with Joe Rogan,
yeah,
and it was all AI. It wasn't him. Yeah, it was
was it
crazy.
really
Yeah, yeah,
powerful stuff? Well, Rod, thank
yeah.
you very much for taking the time from
Uh,
your busy schedule.
I
Very much
appreciate it,
appreciate
brother.
it. Let's
Great to see you, my friend.